Hemang Jani is with us with his thoughts on some of these news. Hemang, good morning. Thanks for joining in. Since I was talking about IIFL, Hemang, I'll ask you to comment on this. They have Prem Vatsa as an investor already. Now the CDC group invest in their company 1,000 crores in IIFL Finance. And that's substantial because the overall market cap is not too high as well for IIFL. And one of the units gets funding of about 1,000 crores too. What's your sense on what's happening with some of these brokerage stocks, which are virtually NBFCs now?
Yeah, hi, good morning. What we have seen is that the entire financial services pack is showing a lot of momentum, particularly the NBFCs, and we have seen that the entire pack has been re-rated over the past 2 quarters, and some of the companies in fact are quoting at a valuation of 3 to 4 times, leave aside the Bajaj Finance of the world. The fact of the matter is that some of the broking verticals too have a NBFC presence, whether it is India Infoline or Motilal Oswal and Edelweiss. And these NBFCs also are reporting a very strong growth, including the housing finance subsidiaries that they have. So I believe that we are undergoing a process of re-rating as far as the NBFC vertical is concerned. The pure or core broking business per se is not showing that kind of a growth. Yes, the mutual fund distribution, etc. is showing some traction. But I think the entire growth is driven by the NBFC piece that these all have. And particularly talking about India Infoline, the current 1,000 crore funding which they would be getting, I believe, is for the microfinance, and which we have all seen that the kind of growth that some of these companies are getting, and the IPO that was there, Equitas and a couple of others have met with a lot of success. So I think the sentiment continues to be positive. So expect some more upside for some of these companies.
Yeah. You can. This could be very, very interesting for IIFL, India Infoline. Just watch out. All the other stocks are moving up. Yesterday, there's Motilal Oswal, which is up and active. Edelweiss was up and active. So I think Fortune Financial Services, bring up those stocks for our viewers. Fortune Financial Services was the other one which went up in trade today. So brokerages as a pack were very active. Do watch out for some of these stocks as well. That aside, if I just look at the other stocks in news, Hemang, disappointments yet again from mid-cap IT. Sasken was a separate case in point, but KPIT, Nucleus, not quite living up to the mark.
Yeah, absolutely. Both for some of the large players as well as the mid-cap IT companies, we have seen that this quarter has been, it is majorly disappointed. I think, for now, the focus has completely got shifted to the domestic driven themes and stories, because, given the uncertainty which is there on account of Brexit, the salary hikes, and the fact that the currency headwinds are going to be still bigger in the next couple of quarters. So if you look at the outlook that some of these companies have given, it is also not looking that encouraging. So I think the sector is likely to remain under pressure for a while.
Well, important day of earnings, Hemang. Kotak Mahindra Bank, HDFC, what is it that your expectations are? Steady as set, as is always the case with HDFC Bank?
Yeah, absolutely. I think in case of HDFC Bank, it's going to be another steady quarter. We are looking at a top line growth or the net income growth of about 16 to 70%. And the net profit growth of about 20%, and asset quality, as always, would remain quite steady. So we think that HDFC Bank should react positively. We have a positive outlook on the bank. It has, in fact, a little underperformed in the last couple of quarters, given the way Yes Bank and IndusInd Bank has performed. So I think HDFC Bank should catch up once the numbers are announced.
What is the expectation then, Hemang, from ITC, and especially in the light of what Unilever did, wherein their volume growth didn't quite match up with what the markets were expecting? ITC in any case has been a little problematic because, the cigarette volumes, which is the cash cow for them, in any case has been dwindling for over a year now.
Yeah, that's true, Aisha. In fact, last 2 quarters we've seen that the operating performance of ITC has not been up to the mark, and this time around we are expecting about 7.5% kind of a growth in the top line. However, I think the operating profit margins would remain quite strong, and the overall net profit growth would be about 9 to 10%. So it is going to be something similar to what we have seen in case of HUL and couple of other companies, where the volume growth would not look that great, but because of the kind of stability that they display and the kind of sentiment which is there for the FMCG sector because of the better monsoon, I think these stocks would remain quite resilient.
Yeah, indeed. Just a couple of other stocks which are going to be in focus. And, Hemang, you just discussed the prospects of mid-cap IT and how disappointing mid-cap IT results have been, much in line with the frontliners. But what is your sense? How much more weakness and these stocks become an attractive buy? Or do you sense that we're going to wait it out for some scope of recovery in the earnings before start jumping into IT names at all?
See, Aisha, the way we look at it is that, we have very few, in fact, mid-cap companies under our coverage. And what we have seen is that, companies like KPIT and, couple of others where the disappointment is there is more a company-specific issue. Yes, of course, Infosys was a bigger disappointment, but the companies which are focusing on the niche segments, so something like Persistent System, which are, I think, yet to announce the numbers, we don't think there is going to be any major disappointment because there is a trend towards more investment in digitization, etc. So I believe that one should remain selective, and even within the larger companies we have seen that TCS was not that bad. And the other important factor is that the valuations have actually become more reasonable. So today Wipro is quoting at about 12-13 times forward PE. So I don't think there is going to be too much of a downside from current levels.
What's the view then, Hemang, on mid-cap pharmaceuticals? Has one missed the boat when it comes to pharma? Was the right time to buy 2 months back when it was all gloom and doom with regards to the US FDA clearances?
I think we are seeing some positive signs coming back for the pharma sector as a whole. Talking about the mid-cap, yes, I think the recent development of the Crestor, where we have seen some of these companies getting approval, could be a positive trigger. So something like Glenmark Pharma and Aurobindo Pharma, I think, are going to benefit. Our rough estimates show that this is an opportunity of about $50 to $75 million, and the operating profit margin could be about 25 to 30%. Also, we have seen in case of Aurobindo, the traction on the approvals is very strong. Even Glenmark has given a guidance of almost about $50 to $75 million, and the operating profit margin could be about 25 to 30%. Also, we have seen in case of Aurobindo, the traction on the approvals is very strong. Even Glenmark has given a guidance of almost about 25%, including one exclusivity of Zetia, which would be a big opportunity for them. So I think selectively some of these pharma companies, particularly Aurobindo and Glenmark, can give a decent upside from current levels, and we are looking at about 15-20% kind of an uptick there.
Hemang, the other stocks in news today, and coming on this one, coming on Motherson Sumi as well, it's been having some good days after a painful period. They're also doing some business restructuring, and at least on the verge of it. They have been advised to do the same as well. Volkswagen outlook is positive too. What do you do with this one?
I think off late we've seen some positive statements coming out from the management. If you look at the quarterly numbers also, which were announced last quarter, there was some kind of an improvement in the volume and margins both. And I think this restructuring announcement which has been made is viewed extremely positively because it will give the right kind of a valuation for the core business that they have. So I think that, out of the kind of uncertainty that we have seen from the likes of Bharat Forge and couple of other companies, Motherson Sumi clearly stands out because there is going to be a more visibility in terms of growth and operating profit margin. So I think, there is going to be a positive sentiment around it.
Hemang, what is the number 1 pharma investment recommendation? And leave out a Sun Pharma and a Lupin. Those are the easy ones.
Yeah, so what we are saying is that, for the upside from current levels, we would be betting on Aurobindo and Glenmark, which we've already touched upon, because Crestor is one opportunity, which is going to be about $50 to $75 million. Apart from that, there are about 3 to 4 different drugs including Zetia, which could give the good traction and good operating profit margins for some of these companies. And remember that for the larger companies, the entire remediation effort is taking a while, both for Sun and to some extent for Lupin. So some of these mid-cap companies where you see these kind of specific opportunities, I think the traction is going to be good. So these are the two ones that we like. Even Cadila, we have a positive rating because we had some positive outcome on the US FDA inspection at one of their plants. So Cadila is another one that we like at this point of time.
Well, cement could very well be the action point today, considering the cabinet has now okayed Ambuja's deal to buy 24% stake in Holcim, and this allows the India business rejig for Lafarge Holcim now. Remember, as part of the deal, Ambuja is going to take 50% stake in ACC. ACC is eventually going to become 50% subsidiary of Ambuja, and it's going to entail an outflow of about 3,500 odd crore rupees. This is going to create a linear corporate structure. The Cabinet Committee on Economic Affairs has approved the reverse merger through the share swap as well. Consolidation all the way, Hemang, in the cement space. Cement, in any case, has been a hot sector of late. After Ultratech's performance, what is it that you're expecting from other majors? And more importantly, how have you read into this ACC Ambuja deal?
Well, extremely positive development. I think we've seen that the entire cement pack has seen positive rub-off. Some of the quarterly numbers, particularly Ultratech, have been quite good, and the con call they have given out extremely positive outlook. Even the pricing has remained quite stable despite the monsoon arrival. What we believe is that this particular deal between ACC and Ambuja create some kind of a simplicity in the structure, though of course Ambuja will remain the holding company for ACC. But overall we think that combined capacity of ACC and Ambuja would be about 60 million tons. And if you look at the valuations today, Ultratech is quoting at a EV per ton of almost about 215, whereas ACC is available at probably around $125, $130. So there's a huge gap between a top player like Ultratech and somebody like ACC. Ambuja is somewhere in between at about 140, 150. So I think post this there is going to be some kind of a re-rating. I think the biggest beneficiary would be ACC because it's a simple structure. The overall operating performance is going to improve because of the operating leverage. There's going to be a big catch up in something like ACC. Ambuja, yes, it's going to be positive because of the cost synergies. But I think because of the holding company structure, the company will have to give some kind of a discount of about 20-25%. So I think ACC is something that I would really bet on.